All right, welcome to this live stream. Now, who's in the building? State your name, state your claim. Right, we're just waiting. How you doing, Corda? How you doing, Felix? Good morning and good evening. Welcome, Michelle. Peace to you too. Welcome, John. Yeah, that's the way. All right. So why are we here? That's the first thing we need to try to figure out. But I've already done that. So the thing that is going on here is a pattern that means the XLM is in a process of getting stronger, but it's desperately trying to make that last low, but it can't. So it has to form this pattern called an ending diagonal, right? And if you're an Arias wave member, you can go to the bullish or bearish pattern and click on 5-wave moves. In this case, it's a bear 5-wave. And you can just have a look at the type 1 ending diagonal pattern, just for your reference. So I'm not going to try and make this too long today because I have the kids here and they require my attention. But just to get this thing cracking, I'm going to share my screen just so we can get this thing started. So I did send the alert out. If you're here, you're here. If you're not, you're not. Take a look at this mumbo jumbo of waves, right? We are in this pattern right now that is a downward sloping ending pattern. Some call it a wedge, right? To most technical analysts, they look at it as like some kind of sloping wedge because the price is contained within this area. Now you can go even deeper with this, but this is to do with the triangle that happened previously. So you can go even deeper now if you wanted to. And basically you could take a trend line from the end of wave B, right? And just run it down to the end of wave 2. And you're still going to be dealing with the same thing, right? But the difference is that you don't know this pattern. You don't know what it is, right? But the evidence has become clearer as the waves have been producing this interesting pattern. And that can only mean one thing. This is an ending diagonal, but not the Elliott wave kind, because if you're talking about Elliott wave, this is what an Elliott wave ending diagonal looks like, all right? So first of all, you have a 3-wave down, then you have a 3-wave up, then you have a 3-wave down, right? And then you have a 3-wave up, and then you have a 3-wave down, right? Now, does that pattern look like this to you, starting from the white line? Okay, especially if we're in wave 2, does wave 2 look like that? Especially when you look at exactly where I put wave 2 ending? No. It's because Elliott wave is an incomplete strategy, principle, whatever you want to call it. I don't call it technical analysis. I call it incorrect observation, right? Because when you do understand the waves, you see that patterns repeat at all degrees of trend, fractals and ending diagonals, right? Now, you can't get an ending diagonal without really knowing what the fractal is. Therefore, what we're dealing with here is something that is more complex than an Elliott wave 333333333. This is not an angel signal like Elliott wave tries to tell you. This is actually a proven pattern, right? So what does this mean, right? So right here, I've pointed out that the first wave is an ABC pattern, right? So that's this thing down here, the first move down, right? I'll turn it green so you can see what I mean, because I'm a lean green wave fighting machine. And what that means is that wave 1 will likely be the longest wave here, right? Wave 3 will be potentially the same length or slightly, I would say potentially the same length or slightly longer, potentially. I think I did measure this once and it was potentially down at that line there. I can't remember. I'd have to measure it again. It's probably actually longer than that. But anyway, let's not get too worried about that because wave 5 is going to be small. All right. So wave 3 can never be the shortest. Okay. So what that means is the pattern that we've been seeing, the reason why wave 3 has been taking so long to happen is because this market has a lot of strength, underlying strength. It wants to go straight up, right? As per my ideas in the past, you've seen them. If you haven't seen them, go watch them, right? TradingView, all the links on my website to TradingView ideas versus YouTube ideas. I've been mainly focusing on XLM for a particular reason, so we can't get it mixed up, all right? You don't have to go searching too far. You just go look for the date. Go to the chart, look for the date, look for the video, right? I'll make it easy for you. Now, that doesn't mean that I don't cover other markets. Go to my website, watch the bullish series, go to my previous ideas. Over time, you will see that I have actually evolved Arias wave to become much more efficient in my interpretation of it, right? Now, you can learn Arias wave and you can be damn well better than me. You could be 10 times better than me. That's fine. Maybe you got more time on your hands. Maybe you have a better brain than me. Maybe you just think clearer. Maybe your health is better. But the point is that the pattern has to be identified properly in order to understand what it is and what it means. So when you start to see this kind of pattern, you start to realize that there can only be one outcome, right? Because this pattern does not exist in any other way. It's so complex that you can't get it wrong, right? And the reason I say that is because of the Arias wave pattern. Once you learn the Arias wave pattern and all the variances and how everything interconnects and intertwines, you start to see exactly why this is happening right now. So if wave 1 is a zigzag, right? And by the way, this is a type 2 expanded zigzag because the B wave ended lower, B wave in brackets ended lower, right? Wave 3 is proving to be a type 1 zigzag, expanded zigzag. So that means this thing is already starting to provide the clues that this thing is getting weaker, right? So I expect wave 3, and I'll go down to the lower level in just a second, right? So let's go to the 5-minute chart. No, I'm busy now. I'll be with you in a minute. Okay. So I got my daughter here with me. She's getting pretty tired. So I'm doing this for you guys, right? I just want to really want to help you out here to understand what's going on. So basically we have wave 3 zigzag, right? So if you look at the first part of wave 1, you can see that wave A was this big. If you look at the first wave in wave 3, you can see that it's hang on. You can see that it's this big, right? Can you see that? So compare those, and you can see that yes, the wave 3A in brackets was bigger than the wave 1 A wave in brackets, right? So we do have stronger price action impulsively when it comes to the impulsive part of the zigzag. However, when you look at wave B, where's wave B coming back to now, right? So to understand this, you need to go closer. So we're going to go to the 1-minute chart, right? Now, if you could understand this, we're just at a smaller degree, okay? So what we have here is an A, B, C. Sorry, let me just do that again. I'll do that with the line. We have an A, B, C, D, E pattern. And where's the E wave ending? It's ending where the end of wave A roughly ended, right? Right there. So this is resistance right there, because you know, support becomes resistance once you break through the support, right? So this is exactly the same. One of the principles that you use when you're dealing with Arias wave is that it basically takes every kind of technical analysis that's been done so far to date, and it basically wraps it up in a nice little parcel for you. And then you get to explore it yourself, and you get to see what it means, what it does, where it's going, where it ends. But most importantly, it provides you the clues as to what that means. So what does an ending diagonal mean? It means that, well, it doesn't have the strength to make the impulsive moves in 5-wave moves. It has to make them in zigzags, right? So wave 1 is a zigzag, wave 3 is a zigzag, wave 5 will be a zigzag. That means this thing's barely trying to get to the lows. It's barely trying to make that low, right? So back to the 1 hour for a moment. And by the way, let me check the live chat to see who's chiming in. Welcome back, Flashback. Good day. G'day. G'day, mate. David, welcome back, David. Good morning to you, sir. Right. So basically, what this is all about is we're trying to make a final low. Okay. So a lot of people might be thinking, oh, okay. So technically, I'm like a lot of, this is the general rhetoric I'm hearing at the moment. I'm expecting cryptos to crash and then spring back, but I expect them to go a lot lower. Okay, fine. So that's just an idea, but doesn't have any backing. There's nothing to back that up, right? So when it comes to Arias wave, not only does it give you the correction, it gives you the impulsive clues. So why would wave 5 be an ending diagonal? Because it doesn't have the strength to make a 5-wave move, right? 1, 2, 3, 4, 5, where 4 doesn't go into the area 5, and each wave down is a 5-wave move. Instead, an ending diagonal is wave 1 is not strong enough to make a 5-wave move, so it's a zigzag. But the Arias wave pattern is in the B wave, right? And then Arias wave occurs in there, then you get your wave 3. And then Arias wave occurs again. And then you get your wave 4. Sorry, 5. So 1, 2, 3, 4, 5. Right? It still follows the same rules. Wave 3 can never be the shortest. So if wave 3 happens to be the shortest here, that means that it's barely trying to reach that low across the board, right? It doesn't have the strength to make that low. So it has to try, because it has to make that low. That's why truncation is absolute garbage. When it comes to Elliott wave, truncation is a fallacy. It just means that the person who invented Elliott wave didn't understand what was going on and why that was happening, right? Because what's the point of an ending diagonal if you have truncation, right? It doesn't make sense, because truncation means a 5-wave move couldn't make a last high, but yet you have an ending diagonal which barely makes the last high, and it has to. So really, the whole thing is like ridiculous, right? It doesn't make any sense. You have to make the last low, regardless. Truncation is rubbish, and so is Elliott wave. Okay, so what I did is I took Elliott wave, I took the good things out of it, and threw the rest in the bin, right? And then I realized what's going on, and then realized how much more detailed the corrections are and what they mean for every single wave that occurs in every single pattern. That's why you see a bunch of squiggle ups and downs in the market, and you think, what the hell's going on? This is taking way too long, right? So let me get back to the live chat for a moment here, just to understand what people are thinking. What do they have to say? Okay, Jose. What I'm trying to say is that by the law of the waves, right? Wave 5 must, absolutely has to make the final low, right? It has to. There is no way around it, right? It has to make that final low. So it has to do it no matter what it takes. So that's why it can't be 5 waves down like the first example here, right? So it has to do it in this method. But that last move down here has to break that bottom low, which is has to go below each and every single wave, whether it's wave 3 or an expanded correction in wave 4, it has to make the final low. So this actually helps us, because now what we can do, and I've already done it, by the way, and this is not financial advice, I have set on Binance a buy limit order, right? A spot. I don't use margin, right? We don't need margin here, right? Margin gets you in trouble, right? A spot limit order to buy at 27,355. So that's 27 cents. So it's 0.27355 on the XLM USDT chart on Binance, right? So I've set that buy limit. So the moment it even makes one tiny low, one tick below or at the low, right? It'll automatically buy XLM, the amount that I have decided to buy, right? So if you go to Binance, there's a bunch of tutorials that teach you how to use it and that, right? But my background is from margin trading. And initially I was going to do it manually, but in these kind of markets, I could be asleep. I don't want to worry. So I just program the damn thing to do it for me. And that's how you do it. You set the spot. So you got to basically go into the classic, the trade menu, or I think it's the trade menu in Australia. It could be different for the US. I've noticed with one of my members, but basically you get the chart on the screen, and on the right-hand side, you can search for the pair. So if you have all your money in USDT, you're searching for XLM USDT, and then you're programming the price of USDT. So we're looking at 27,355. You put in the USDT 27,355. You buy XLM at that price, and then you can put it to 100%, or you can put it to 50%. Depends on your strategy. I don't know how much you want to put at the start, but to me, it's just easier because I don't know with an ending diagonal. Even though it's moving slow, I could be asleep when it happens. I don't know. It could happen on Sunday. It could happen on Sunday morning before I wake up. I don't know, because it's not moving fast, right? It's not moving fast at all. So you have to just, I suppose, use what you have and try to get that order in at the right price, right? So just 1 second. Just give me 1 second, please. All right. Sorry about that. My daughter was just asking me a very important question, so I had to attend. Now, I hope you understand what I'm trying to say. So learning Arias Wave will give you all this information and perspectives, etc. Weak wave down means strong market, yes. Strong up trend. So XLM is in a strong uptrend, and it tried to make a wave C. Now, if you look at a normal wave C, it's actually a pretty strong move, right? Like just check out the move in the Dow Jones when Corona happened, right? That thing was straight down, right? You saw how straight down that was, right? The last low that made was, the whole thing was like a straight line, okay? But we're dealing with a different pattern here, okay? And we're also dealing at a different time within a different pattern. So we're in a D wave, and we're in a C wave of a B wave of a D wave, right? So the C wave here is a different C wave that you're seeing in Bitcoin, right? Bitcoin is different. This is, I try to explain this to my members, but the C wave in Bitcoin is part of a larger correction, which is wave 2 of a move that started in 09, right, and ended in 2017, right? But this is a D wave. The D wave started in, I think it was 2017, and that was a D wave. So that's a zigzag. So we're in the B wave of that. So it's a different move completely. If you don't know Arias wave, then you can't comprehend it in the same way that I'm like, the members might get it because they can pull up a chart, pull up the pattern on the portal, right? But to the everyday person, they might be really wondering what do I mean by that, right? So what I'm trying to say here is alternation is in play. So we have our wave 2 was pretty small, and wave 4 was pretty big, because that's alternation between these two waves, right? So at the end of the day, the reason why this wave 4 has done what it's doing is because it's the weakest wave. It has to make a new low. And therefore, as I've already explained, right, the 5-wave move has turned into, sorry, let me just fix this up, an ending diagonal, okay? And that's the only thing that can explain this particular move. There is no other explanation for it because Arias wave covers every single wave possible. It's a complete program, right? It's a complete methodology. It literally sinks Elliott wave down into nothingness, right? Because it's too subjective. Arias wave, and you have me here as the proponent of it, explaining to you every single wave most days, right? Yesterday I didn't post, but most days I post every day. And what I see here is a weakening 5-wave move that's trying to get to the red line, okay? Now, forget about these other lines. Let's just get these out the way for now because it just alerts, now that I put a buy order in, I don't need an alert. So forget that. So the point is that wave 1 is zigzag. Wave 3 will be a zigzag. Wave 4 will be probably a bit smaller, right? And then wave 5 will finally zigzag out. Now, we don't know what it's going to, if it's going to go, it probably will go a little bit below, but then it'll just basically, it'll start heading into D wave, right? Now, there's a very tricky thing about D waves, right? And I'm not going to talk about it until we get to the end of this move because I don't want to give too much away about D waves. They can be very misleading, but all I can say is if we break the white line, so whatever happens, we make a new low, right? We make a new low, we break that white line, right? You're going to see something that it's going to throw you off completely. And that's where you need to be careful because if you don't know Arias wave, you might think this pattern is something other than what it is. So for now, let's try to keep it simple and straightforward. Okay. So let's just, okay, I'll check the comments. Nothing new. Jose, which is sort of weird. Yes. Strong market. Thanks. Okay, cool. So now this is for entertainment purposes. I'm not a financial advisor, right? But because we use Arias wave, that gives me the ability to explain it to you the way that Arias wave works. And if you don't know how Arias wave works, you can sign up to it, right? 50% off until the end of June. And then from then on, you're paying $9.99 USD in XLM. Simple as that. I don't have to say it again, but I keep saying it every video. Why? Because that time will end in approximately 12 days. And then that'll be the end of it. So whatever, who cares, right? Now, can you see that this market has started to drop when it hit that area of resistance since I've been talking? Now, let's zoom in and have a look. Oh my God, look at that. Now, I drew that on purpose at the exact right time to explain my whole theory to you because this is how Arias wave works. When you understand the patterns, you can make bold predictions, bold calls, but you have to see certain things happen first. Now, the first wave 1 down was an expanded wave 1. So you could tell it had a lot of strength because the B wave didn't end anywhere near the end of wave A. But wave 3 it came back to where those less, like when the zigzag loses strength, it still has strength, which is why it's expanded, which means it went below the start of wave A, but it still came back to the end of wave A in brackets for that zigzag. And then you can see the kind of rejection that we're seeing here, right? In wave E, right? That's pretty big rejection if you ask me, right? Now, you saw me draw that line and explain it to you before it happened live. Okay. So it's not like, oh, he made that up just now. Yeah. And I just made the whole Arias wave thing up. Yeah. Seriously, go back from my videos and you'll know what I'm talking about. This thing is for real. You need to learn it. If you don't learn it, you don't make money. Simple as that. I'll be posting videos daily showing you how this thing works, right? But you won't know the pattern. The pattern can only be learned through the program. Anybody can do A, B, C, D, E. I mean, everybody knows the alphabet, right? Everybody can count to 5, right? 1, 2, 3, 4, 5, A, B, C, D, E. So there's 5 waves in a correction and there's 5 waves in an impulsive move. But is that the end of the story? No. There's far more deeper meaning in that. And that's what I'm trying to get across. So right now, how far do we expect this wave 3 to go? So what you do is you take the length of wave A of wave 3, right? So let's make this a bit bigger so we can all see. Hang on. Let's just make this one green because it's wave 3. I tend to make wave 3 lines green. So basically now this is not going to work out if I do this because it's going to go, shouldn't be too bad because we're at a pretty small degree. So basically, if we take that line, we should basically go down to this level, right? Minimum this level. If this keeps dropping from here, the end of wave B, we should then start to see wave C, right? So that's the zigzag for wave 3. And then we're going to see 4 and 5. Now, if wave 3 is similar in length to wave 1, which it could be potentially, you'd have to measure it. I think it's going to be probably slightly smaller in length. It doesn't really matter because this is going to turn into a wedge. You're going to see a new break of a low. And then once wave 4 ends, and this is the funny thing about this whole thing, right? Because it's an ending pattern, you could see wave 4 jump all the way up here without making a new low, without hitting that red line. So what happens if wave 3 ends above the red line, right? And then starts to do its wave 4 price action magic and go up here. What are you going to do? You're going to freak the hell out. That's what you're going to do, right? Because you're going to think, oh, okay, it didn't make the low. You're going to lose patience because you don't know the waves, right? And then what's going to happen is the last zigzag will occur, which doesn't have to be, right, as long, which will be shorter in length than wave 3, because if wave 3 is shorter than wave 5, wave 3 can never be the shortest. Wave 5 will finally make that last low. So if that's what it takes, then that's what it takes, right? If this has to take a little bit longer to do what it has to do, so be it. Who cares? You've got a buy limit. You have faith in the system. You'll know the waves. You're going to have to wait. What can you do? Right? This could be a short process, take a short amount of time. But the fact that it's going to do that kind of move, well, not the fact, but likely because it's a wedge. Usually wedges bounce between the channels, right? Then by that point, a lot of people will be basically stopped out or lose confidence and see a break of the low, thinking that it's going to go down lower, not knowing that the pattern means that it's actually a weaker pattern. And then the whole thing will just reverse and go up, right? So I'm literally explaining to you how in-depth Arias wave is and what it means right before you hear. And I've done that the whole way through. Go back through my videos, right? Go back through my trading view videos and my live streams. I give you alternate scenarios. But now I can see quite clearly that we are seeing an ending diagonal and it's type 1, right? Now, to the members, you know what that is. To the non-members, you don't know what that is, unless you're really been watching every single video and taking notes and putting them into a database. And then, that takes a lot of effort, If you could figure Arias wave out by doing that, hats off to you. You are very diligent. But apart from that, I'm trying to build a community of trust, a community where we all contribute to each other. Eventually, we'll do a closed group where we can all share ideas and collaborate together to make it more beneficial for everybody involved, to be able to share ideas, ask questions, it's just going to get so much better from here, right? This is just the beginning. So this is my life purpose. This is my life goal. It's working pretty well so far. We have clues that tell us that we're going in the right direction, and nothing could be better than clues that tell you that you're going in the right direction. And that's what Arias wave does. It literally tells you logically, why would this be an ending diagonal if it was just going to keep falling like a rock? Why would it do that, right? And I have other pieces of evidence to suggest this sort of thing, and that's with the XLM BTC chart, which I have touched on many times, and I will touch on again in the future. But like I said, my time is limited at the moment. But thank you, Secure Cryptocurrency. Welcome back. Thank you for following me closely. NY6N, hi, how you doing? Welcome to the live stream. Yeah, I'm so happy you guys are here to see this sort of information, because it's basically non-existent anywhere on the internet. You will never find this level of clarity on the internet relating to the waves. It's just not going to happen. So I hope you've sort of got the message a little bit. It doesn't necessarily mean that we're going to hit the low. We're going to hit that bottom trend line straight away, and that's going to throw a lot of people off. Now, remember, we're dealing with crowd psychology here. So people aren't going to care. A lot of people aren't going to care. You know what a lot of people will do? They will literally margin trade this because it started going up before it hit the lows. They will go long with the stop at the lows, and then it'll come back and make a new low. That's just how it works, right? That's what people do. I used to do it myself, right? When I first started learning waves and use Elliott wave and indicators and that, I used to do the same thing, and I used to get wrecked every time. But I kept throwing money at it. I kept learning. I started using my brain after a while, because, when you get too greedy, um, that messes with you. But then when you start to learn and throw more money at it, you start to change from greed to analytical mind mode, right? And then you just go to if you keep doing that and you're persistent enough as I was, you go to a whole new level. You just go like full beast mode on the waves, and you literally will be like a wave master, right? And I don't like to use that term loosely because it's very hard, but it is possible with a lot of practice, right? So I'm trying to bring you that here. I'm trying to give you what I got, right? And if we see this play out exactly the way I say, then it's not going to be nothing new to me. To me, I'm looking forward to the D wave because that one's going to be tricky. That one's going to look impulsive to the upside, but it's going to have its ramifications as well, especially to margin traders. Those people should be careful. But apart from that, try not to margin trade, not yet, not until we've made our capital, right? Because there are far more opportunities ahead that are going to lead us to many opportunities, and you'll be able to do so many other things, right? So do we want this wave 3 to be smaller than the wave 1? Yes, we do. Because that means that wave 5 can't be any longer than wave 3. And if wave 3 is shorter than wave 1, that means wave 5 has to be the shortest. And that's the process of elimination, right? That's how you use Arias wave. That's how you use it throughout the whole system, not just in ending diagonals, but it's just the whole thing. The whole thing is designed that way, right? And it took a lot to get here. But I think it was worth it, right? It was worth every part of it because understanding the waves is truly rewarding, especially when we live in a world of markets, hype, FUD, central bank intervention, money printing, all that sort of crap. Felix, a leopard can't lose its spots and a chart can't lose its fractal fingerprint of the people behind the trades. That's the backbone of why I'm following the logic of your system, learning daily. Thank you, Felix. And also, congrats on closing on the house. I saw your message. That's amazing, my friend. That's amazing. You did well. And I know that you're going to be part of the family soon. And I look forward to having you as a member because as you can see, this is the most logical way you're going to learn the waves. If you try to do it any other way, forget about it. Exit here. Welcome back. Welcome back. Right. So we're heading almost towards an hour. So I'm going to close it off soon. We started 9:05 around then. But basically, exit here, if you just tuned in, we're looking at an ending diagonal. That's the pattern that we're expecting to see. Right? Wave 1 was a zigzag. Wave 3 is a zigzag in the making. It should turn down lower from here, but then it's going to move up in wave 4, and the last zigzag will be down in wave 5. Ending wedge, you can call it an ending wedge, you can call it an ending diagonal, you can call it whatever the hell you want. If you're an Arias wave analyst, you're going to call it a type 1 ending diagonal, and you're going to understand why it's called that, right? It's called that for a reason. And you won't know that reason until you actually learn the program. Till then, you can just keep following me and seeing how right I am. And then you make your own judgment. But literally it's showing us weakness in the downtrend, which means the strength in the uptrend. So he just woke up. Yeah, well, obviously you must be in, I would say, around San Ramon or Chicago. One of those, I reckon it's got to be. Moving in today, should be on board with the program within a week. If all goes planned, just got to sell some stock and up listing company. I'm invested when it hits my target. Hey, no problem, man. No problem. Hey, look, there's a lot of people who are currently onboarding Chicago. Yes. Awesome. I caught it. I have iPad with a lot of my members time zones on the wall. So I like to keep track of my members. I'd love to visit some of these places one day as well. Let's make the money first, and then we can do anything. And hopefully, we don't need a vaccine passport to do it. The times are changing, and there's all sorts of agendas and narratives going on. And this is part of the reason why we're seeing what we're seeing. So remember, nothing is by accident in this world. So if you follow my live streams closely, you will know that I have a lot of background knowledge on agendas and narratives. So what we're seeing now is merely a freak show, a puppet show, where the Fed needs to print more money in order to make this thing not die, and for the powers that be to stay in power. It's pretty funny, right? When you know the truth. It's not funny when you got to deal with the whole, QR codes and masks and lockdown type crap, because that's absolute BS, right? But at least if you're not, dealing with, at least if you know some, if you have some background of what's going on, at least you can sort of understand why we're going to see some crazy exponential moves coming soon, right? And not everywhere, not every coin, right? Now, you know what exponential means, right? The doubling effect. Exponential moves are an amazing thing, but they don't last forever. They do have their ramifications. How can you go from 27 cents to 100 and something dollars? It's called exponential gains, right? Just like we had in 2017 when XLM made over 15,000% gain. How did that happen? Was that an accident? Or was that just exponential gains based on a pattern, which is based on Arias wave, right? And that's how we measure, that's how we move. Good one, Felix. Yeah. Yeah, Arias wave is like vitamin A 12, except it would be like A5, 5 waves in a correction, Arias wave. So patience, definitely the key, Joshua. Thank you for joining us. Patience is the key. Have your limit order set. Don't become part of the crowd and just suddenly go long because you saw some little bounce that looked bigger than the last bounce that you saw and blah, blah, blah. We need to see a pattern complete. When the pattern completes, then you know you're ready for action, right? But you want to be buying when the pattern completes, and you want to have a good reason for it, right? There are going to be plenty of more opportunities in the future where we use different strategies to get into trades because the pattern is different. It offers a different method of entry, right? So, for example, let me give you an example. You could scale into this in a few ways, right? If you're not really familiar with Arias wave and you really want to scale in rather than just go all in or whatever, if you don't have the confidence and don't understand what's going on here, right? What you could do is wait for that low. Now, by the time that low happens, wave 4 would have completed. So that is one area. So you could scale at the low, you could put a percentage in at the low, wait for a break of wave 4. So I'll make this a thick yellow line just because it's different, right? You could put some down here, put some down here at the break of the white line, some more, and then at the break of the all-time highs or the previous C wave where the previous where the start of C wave happened. So if we go to the daily chart, right? So that would be at hang on. Oh, I zoomed out way too much. There's so much scribble in this chart. It's getting a bit crazy. Hang on. Right, you can put some more here at the break. You can put some more, but that's just basic understanding, right? That's just basic understanding. If you really want to know what you're doing, you're going to have to learn the program. If you want to be careful, you want to just go based on some previously known fundamental reasons, like a break of wave 4, a break of the end of wave 4 on wave 5 and the previous wave 4, or the break of the highs, the break of the all-time highs, all that sort of stuff. You can use all that stuff for where we're going. I believe we're going a lot higher, right? But if you want to stay in faith, then you're going to be following Arias wave, which has its own sort of reasoning behind it. Like, these are fractal patterns, right? So if you could try and understand this for 1 second, this is the one last thing I'm going to give you before I got to go. But first, I'll just check out the comments. Welcome, Hector. You're welcome. Oh, I'm not going to get into that now. There is actually something I'm about to say that gives you a clue to that. So I was about to get into that, but it's hard to, you have to sort of visualize it in a particular way. So it's very hard to explain. It has something to do with why, like if we go back to the 15-minute chart, right? It has something to do with why the B wave has ended here and will likely drop further from here at the end of the first impulsive move, right? That's a clue, right? That's a clue. So once the D wave completes right up to our target and we take profit, there's going to be a crash, and that's going to be an E wave, similar to what you're seeing here, but at a larger scale. And it's going to come back to roughly where the first impulsive move ended, back at the start of the chart, which I won't show you here. You can do your own research because I'm about to wrap this up. But there is ways of knowing, using Arias wave, what kind of expanded pattern you're seeing and what kind of pattern you're seeing. It all makes sense once you learn it, but yeah, you have to learn it, I suppose. Otherwise, just watch my videos. Eventually, I will give you all the insight because I'm going to track this daily. I'm usually tracking it daily. If I miss out a day, like yesterday, it's because not much happened. We moved sideways and I was waiting for confirmation to see what the pattern actually looks like, before I can bring you something that's actually worth talking about. Apart from that, I'm like talking to members that are signing up. I'm signing them up. I'm also assisting members with inquiries, questions about what they're seeing. A lot of the members are pretty good with it, but you know, nothing's easy. Everything takes practice. Good morning, Adrian from Tennessee. Oh, I love drinking some good old Tennessee whiskey. Take it easy to exit. Talk soon. Right. So that's about it for now. Right. I like to end it at the highs. And right now we've hit the highs. You guys know what I'm feeling. You know, you guys know what I'm thinking. So if I don't report to you tomorrow, which I probably will, we are expecting a move down, and it probably won't hit the lows because of what I just explained to you. And then it'll move up. It might even potentially break that line, right? It might even break that line, right? Don't be surprised. It's going to be a fake out. Okay. And then it's going to just come back down and make a new low. And that's where people are going to get completely wrecked on this one. So to me, that's going to show that's going to show you later the strength of Arias wave, right? That's good. That's going to prove itself to you. The theory itself, right? Which I firmly believe, which I'm firmly in line with, which I teach. 50% off until the end of the month. There's only 12 days left. I don't know what else to say. Good one, Felix. Greg, XRP is going to be dragged down with Bitcoin. I believe they're in a weak wave C. It's going to give chance. It's going to give the other alts, the chosen ones, the opportunity to move higher during this process that is unfolding with the Fed stimulus, basically money printing that's going on. The Dow Jones, I expect it to hit 40,000. The ASX, the Australian stock market, I expect it to hit 10,000 or just beneath. So I can't see your magenta high. Yeah, my magenta high is the reason you don't see magenta. Well, you do. There is a magenta here. There's a magenta there for the break of wave E of wave 2. We saw that, right? But this is not a wave E. So this is actually a wave 5. Okay. So we're dealing. So basically, the break of wave E would be, if you were to have a magenta wave, it would be here, right? So you'd change this to magenta line. And by the way, you haven't even signed up yet. So what are you talking about? Sign up first, and then we talk magenta lines later. So that would be the confirming point right there, that this trend is definitely reversing once we cross that line. And that looks more purple to me than magenta. How about that one? There you go. You happy now? So once we hit the low and we break the magenta line, you would put a solid red line at the bottom, all right? But you'd have to see the magenta line broken first. But no, like, you don't need to margin trade. So to me, it's just the confirmation point. Definitely when you're margin trading, like if you were to go short here, you would have used that stop, break of that low. And then you'd still be going short, right? And even if it bounced back, you'd still be going short. But how would you know to do that unless you knew the waves? As soon as it bounced back up here, you'd be like breaking even, and then it'd just drop. So this is a funny thing about trading. Margin is that if you don't know the waves, you will get creamed on those type of moves, right? Unless you know the waves, then you can definitely just like take profit, wait for the bounce and re-short it and make double on leverage, right? I used to do that, right? But I find that with cryptos, you don't need to do it, right? You don't need to do it. But I'm also trying to teach people responsible trading as well. So I can't give you that kind of thinking, right? I have to give you the safe approach to trading, right? I don't want to be irresponsible, right? Because that gets your losses across the board. You will lose money if you trade like that. I'm telling you now, right? Unless you really know the waves and you have good capital built up, forget about margin trading, forget about 3x margin, forget about 5x margin, forget about all that kind of crap, right? Because it's not going to get you anywhere. All you're going to do is you're going to resent trading, you're going to regret your past mistakes, and you're going to learn nothing because your mind will be too focused on the past, right? And your losses. That's why I teach this stuff, because a lot of my members have probably, I think a few of them have had significant losses for whatever reason, right? And they want to avoid that in the future. So the whole point is to learn how to bloody trade and learn the waves yourself. Otherwise, why are you going to just try to rely on some guy on the internet, right, who is consistently accurate and pretty funny and good looking and that, but at the same time, you need to learn it yourself, right? You need to understand that what happens if I get too busy with my program and then I have to like spend more time with my members and training and that. I have less and less time. Now, that I'm not saying it's going to happen, right? But what if that does happen, right? Then you need to have the knowledge and the material to refer back to when you're navigating through these waves. And it could be any market. Arias wave applies to every single market. Dow Jones, euros, cross pairs, fiat currency cross pairs, all the cryptos, commodities, oil, precious metals. I have the bullish series on my website. Check it out if you haven't seen it. I know I keep mentioning it, but at the same time, it's kind of like this, right? Knowledge is power. Knowledge is power, right? If you know how to do something, you can do it yourself, right? Never send someone to do your job for you because they're never going to do it right the way you do it, right? Never send a boy to do a grown man's job, right? You can't rely on other people. You won't find another Arias wave on TradingView. You won't. You won't. You will get all sorts of crap that will give you breakout here, breakout there. That was a great trade. But they won't give you understanding of why the waves are happening the way they are. And that's the problem with every single chart that I have ever looked at on other people's TradingView channels is that they give you potentialities, but they don't actually give you the reasoning behind every single wave that happened since the beginning of the chart. You don't get that. You can't get that. It's impossible. Most people would just say, oh, if you want to learn the waves, just go learn Elliott wave. That's your best bet. No, it's not your best bet. And I'm going to prove it to you. I'm going to prove it to you right here. Stay tuned and you will see. Okay? So now you can take a snapshot of this here and visualize it in your mind. Take a mental picture of this, and I'll catch you next time. Hey, Greg, just send me a DM or something, right? If you want to pay, just send me a DM or whatever. You know how to contact me. But apart from that, guys, thank you for joining us today. Right? We had a good time, and I'll catch you in the next one. All right? Take care.